Hello everyone, I'm Morgan. Today, we're going to talk about a wealth formula that schools rarely teach, yet it has helped countless ordinary people build extraordinary levels of financial success. Most people spend their entire lives believing that wealth is something reserved for the lucky, the highly educated, or those born into rich families. They see millionaires and billionaires and assume that these individuals possess some secret knowledge unavailable to everyone else. But the truth is far simpler. The principles of wealth creation are available to almost anyone willing to learn them. The problem is that most people are never taught these principles, and as a result, they spend decades working hard without making meaningful financial progress. From the moment we enter school, we are taught how to read, write, memorize facts, and pass exams. We are encouraged to find a stable career, earn a salary, and work diligently throughout our lives. While these are valuable skills, one critical subject is often missing from the curriculum: understanding how money works. Most people leave school knowing how to solve complex equations but have little understanding of investing, assets, liabilities, compound growth, or wealth building. As a result, they enter adulthood with a strategy that revolves around earning money rather than growing money. One of the biggest misconceptions about wealth is that income and wealth are the same thing. They are not. Income is the money you earn. Wealth is the money you keep and grow. A person earning $100,000 per year, who spends $99,000 annually, may be far less wealthy than someone earning $50,000 who consistently invests 20% of their income. Wealth is not determined by your paycheck. It is determined by your habits and decisions over time. Think about this for a moment. Throughout history, there have been countless examples of athletes, celebrities, and lottery winners who earned millions of dollars and still ended up broke. How is that possible if income alone created wealth? This would never happen. The reason is simple. Wealth is not about how much money comes in. It's about what happens to that money after it arrives. Without proper financial habits, even enormous incomes can disappear surprisingly quickly. This brings us to the wealth formula that very few people discuss. The formula is straightforward: earn money, spend less than you earn, invest the difference, and repeat this process consistently over a long period of time. It sounds almost too simple, but simplicity should not be confused with ease. The challenge is not understanding the formula. The challenge is following it consistently while resisting the temptations that constantly encourage people to spend. Modern society is built around consumption. Every day, companies spend billions of dollars convincing people to buy things they may not need. New phones, new cars, new clothes, luxury vacations, and endless subscriptions compete for our attention and our wallets. There is nothing inherently wrong with enjoying life or spending money on things that bring happiness. The problem arises when consumption becomes a substitute for wealth creation. Many people spend money trying to look wealthy rather than actually becoming wealthy. One of the most dangerous financial traps is something known as lifestyle inflation. Imagine receiving a promotion at work. Your income increases, which is great news. But instead of investing the additional money, you upgrade your lifestyle. You move into a larger home, purchase a more expensive car, dine at more expensive restaurants, and increase your monthly expenses. Before long, your higher income has disappeared into a higher cost lifestyle. Despite earning more than ever before, you find yourself no closer to financial freedom. Wealthy individuals often approach this situation differently. When their income increases, they don't immediately increase their spending by the same amount. Instead, they allocate a significant portion of that additional income toward investments. They understand that every dollar invested today has the potential to become several dollars in the future. They prioritize assets over appearances and long-term wealth over short-term status. So what exactly is an asset? An asset is something that puts money into your pocket or increases in value over time. Stocks, businesses, rental properties. intellectual property, and certain investments can all be considered assets. Liabilities, on the other hand, are things that take money out of your pocket. While some liabilities may be necessary or enjoyable, accumulating too many of them can make wealth building much more difficult. The wealthy focus on acquiring assets because assets generate future opportunities and financial security. Perhaps the most powerful force in wealth creation is compound growth. Compound growth is often described as one of the greatest financial concepts ever discovered. It works by allowing your money to earn returns, and then allowing those returns to generate additional returns. Over time, this creates a snowball effect that can transform relatively small investments into significant amounts of wealth. Imagine two individuals. One starts investing a modest amount every month at age 25. The other waits until age 40 before beginning. Even if the second person invests larger amounts, the first individual may still end up with more wealth simply because they started earlier. Time is one of the most valuable assets an investor can possess. Unfortunately, many people underestimate its importance and postpone investing until much later in life. Another critical component of the wealth formula is patience. We live in a world that rewards instant gratification. Food can be delivered in minutes. Entertainment is available on demand. Social media provides constant stimulation. Because of this, many people expect wealth to appear quickly as well. When they don't see immediate results, they become discouraged and abandon their plans. The reality is that wealth creation is often slow at first. Progress may seem invisible for months or even years, but eventually, the effects of consistent investing and smart financial decisions begin to compound, and growth accelerates. Successful investors understand this principle. They don't constantly chase the latest trend or panic during every market fluctuation. Instead, they remain focused on their long-term goals. They understand that temporary setbacks are a normal part of the journey and that patience is often rewarded. Another difference between wealthy individuals and everyone else is the way they think about money. Most people ask, "What can I buy with this money?" Wealthy people often ask, "How can I use this money to create more money?" This simple shift in perspective can completely change a person's financial future. Instead of viewing money as something to spend immediately, they view it as a tool that can generate future income and opportunities. Education also plays a major role in wealth creation. The most successful people never stop learning. They read books, study businesses, analyze investments, and continuously improve their understanding of how money works. They recognize that financial knowledge can provide returns for a lifetime. Every lesson learned has the potential to improve future decisions and avoid costly mistakes. It's also important to understand that wealth is not built overnight. Many people look at successful investors, entrepreneurs, and business owners and focus only on the outcome. They see the mansion, the luxury car, or the large investment portfolio. What they don't see are the years of discipline, sacrifice, and persistence that made those achievements possible. Behind almost every financial success story is a long period of consistent effort that often goes unnoticed. The good news is that you don't need to be born rich to apply these principles. You don't need a perfect economy, a famous family name, or extraordinary intelligence. What you need is a willingness to learn, a commitment to living below your means, the discipline to invest consistently, and the patience to allow time to work in your favor. These habits may not seem exciting, but they have helped countless people achieve financial independence. At its core, the wealth formula is remarkably simple. Earn money. Spend less than you earn. Invest the difference. Acquire assets. Avoid unnecessary debt. Continue learning. Stay patient. Repeat this process year after year. While many people spend their lives searching for shortcuts, the truth is that sustainable wealth is usually built through consistent actions repeated over long periods of time. The wealth formula nobody teaches isn't hidden because it's complicated. It's hidden because most people are distracted by the promise of quick riches and easy success. Real wealth is often built quietly, gradually, and steadily. Those who understand this principle gain an enormous advantage over those who don't. Thank you for watching. If you enjoyed this video and want more insights into wealth, investing, personal finance, and financial freedom, make sure to subscribe and join us on this journey. I'm Morgan, and I'll see you in the next video.